two things are extremely important. We all, as an investor, looking at the message sending out, where they could be going to be focusing to support the economy. At the end of the day, people look at the long-term cycles of the growth, right? I was told by various, strategists, U.S. the growth will be revised down, from 2.8, whatever, 3% to 1.5 to 1.6%, whatever. Seems like that will be the case, However, I believe China's growth will be revised up because China's growth, so many negative news around the world, talk about the lack of, consumptions, but they didn't say look at the other side, the new productivities coming from the AI-led, AI-powered new manufacture and new supplies, and the new chips coming through to serve everywhere of the supply chains. So China always be underestimated on earnings, on growth. And many people don't even believe the 5% whatsoever on growth. I think I have very little worries about this. More or less, my worries is as a fund manager working in Hong Kong for 30 years, where I should my money, where I should put my money for a little bit longer term. People, now everybody seems like on the trading mind, the trading pattern. You play the market 3 to maximum 6 months because the turbulence, the volatilities, the changes, the regulatory changes, almost every night, every day, you look at the new things, you heard about news. So more or less, we have to look at now, today, 1 year later, where the AI company goes, where the application goes, where the earning coming from, where the margins coming from. That's all the money flow to follow.
What about the problem with overcapacity?
Which side of overcapacity? Which area? Property, of course, we all know that. Property market overcapacity has been there for so long time. That's why we have the crash. We have the crackdown, I should say so, right? But on the other side, the demand is still strong from that generation. We know the Z generation, they are very different way to consume. What they buy, what they spend their money is not housing. Old people, they want to own a house, whatever, cars. They don't really care about that. They care about, just you said, Labubu, what Labubu can provide to you. If your daughter, your kids, or like our age, they really, themselves, their IP strategy is first class,
So we're talking about Pop Mart, we're looking at AI, we're seeing the Chinese markets, the Hong Kong market trade at 3-year highs.
Yes.
Do you think this rally has legs? Would you be chasing any of this? What sectors? I know the mainland banks have been very strong.
Sure.
I was talking about this yesterday.
Sure.
It's because of the dividends.
Yes. This question should be answered if my answer comes from two sides. One is momentum. One is fundamental. Okay, let's talk about momentum first. One, I mentioned this many times. When momentum comes, money will flow. That's exactly the same. You can call it Labubu momentum, you can call AI momentum, you can call EV momentum, whatever. But we can see a lot of money coming to surge, coming to follow, to chase Chinese stocks. After 5 years downside, 5 years drawdown, 5 years corrections, right? We have 5 years. We went nowhere, right? We will talk about where is the hope. Okay, so on momentum side, I believe Hong Kong is on the high rise. And there are 2 reasons. Number one, we will have a strong second quarter or third quarter earning guidance. You wouldn't believe this. Many areas, we saw a huge pickup on earnings. So earning guidance are positive. Okay, it brings momentum. Secondly, huge money are pending, are waiting to rush into market to participate on IPOs. We didn't see the IPO market such a overwhelming, right? And almost every one of them, I had a rough calculation, 90% of the IPOs moving up on the day one. Okay? Why so? So much cash sitting on site. They are fat and tired to buy, those traditional stocks or buy fixed income or buy bonds. They have been playing the bonds game for how many years? 5 years. And suddenly, IPO comes. IPO, we have been holding on the IPO or the IPO market were dead in Hong Kong for 5 years. That's too long. So there's exploration. And we rank number one for the money to raise over 100 billion this year, for IPOs. Ranking for first half, ranking number one. This trend will continue. That's also representing momentum. Nobody really cares of the girls, or maybe a lot of cares, but from the IPO market, they just want to spend money to play this momentum game. Okay, that's the first thing. We have to agree with it because momentum, phenomenal. It's kind of like a fashion, like a wind. When big wind comes, we have the saying, "Pig can fly." That's exactly the same, right? Look at the Ningde Shidai, right? First day up 570%. I'm doing fund management business in Hong Kong for 30 years. I've ever seen this kind of phenomenon. It will continue. Secondly,
you called the Chinese markets 5,000. Hong Kong is at about 25,000.
Yes.
Where do you see it at the end of this year?
It's a very good question. I had a forum. I expressed this early this year. I saw 25,000 points. It's a very important crossroad point. How to means that's a 节点. How to say that's a 节点, like a singularity. That's a 节点. We need a few things to break through that for longer. Okay, we'll be range trading at this moment for a while until you mentioned the big meeting to come to show where the policy to go, where the government going to support. How about the stable currencies to go, right? You know that. So it's all about Chinese government nowadays and in the future to give the market indication how high, how strong China A-share market to go. So let's talk about the second is the fundamentals. Okay, fundamentals. When we talk about fundamentals, what means earnings, right? What means valuations? We have to little bit down to earth nowadays, even though Paul, trading 100 times, maybe last longer. Okay, so basically, I assume I had a very wild forecast, 35,000 in the coming 2 years.
All right,
for Seng Index.